Hi, Josh Denbo here. I'm a consumer protection attorney. I fight for people against mortgage companies, lenders, bad car dealers, fraudulent creditors, folks that collect debts improperly, smash your credit. I do all those things and I really like my job. I've done a lot of talk about a number of things, including mostly mortgage servicing. But what we're seeing right now is a decline in the amount of houses being sold, which means the amount of houses being financed. So what that means is the number of mortgage finance companies, mortgage bankers who are putting together deals to sell houses is shrinking. Now, what happens in a boom market in any industry, and this is happening in realtors right now, because when houses were selling like hotcakes for 2 years, lots of people got the realtor license and started doing business. And some of them who didn't really know what they were doing did okay because it was easy. When it gets harder and mistakes get made. On the realtor side, things kind of just work themselves out. There's not that much room for fraud. On the mortgage origination side, on the application side, there's a lot of room for games. And so what we're seeing, you're going to see, I guarantee you, I'm going to, in the next 6 months to 2 years, I'm going to have a number of people searching on the internet for something along the lines of the deal that my mortgage banker promised me didn't happen. What can I do? Excuse me. Still recovering from COVID. So let's talk about that. Mortgage origination fraud. Now, the mortgage origination fraud can often happen from the actual finance company side, okay? Meaning that the finance company promised me a certain interest rate and I didn't get it. Happens a lot. That's a real thing. But it's more often happening on the mortgage banker side. And here's the difference between a mortgage banker and a mortgage finance company. A mortgage banker is someone you go to who's not the bank, who supposedly shops around to find you the best deal, puts together the package, gives you the pre-closing information, goes to the closing with you, helps you put your finance package together and get the best deal. Mortgage bankers, when they're good, honest, hardworking people, are worth their weight in gold and are way better than going into a Bank of America office or going online to some stupid organization that promises you the sun, the moon, and the stars. You want to be able to knock on somebody's door and say, yo, Billy, what the heck happened? Anyway, mortgage bankers are great when they're great. They're terrible when they're not. And you're going to see, I've seen a ton of mortgage bankers start doing business when times were good. They're slowing down. And so people are going to start cutting corners and defrauding their customers. Here's the most common fraud amongst mortgage bankers. There's a pre-TILA disclosure. There's a pre-truth in lending disclosure that says, look, this is what you're going to get. This is your interest rate. This is your cost. This is your closing costs. All these things. Okay? That has to be given to you by federal law no less than 3 days before the actual closing. This is really important. The point is that a borrower can look at that, spend their time reviewing things, knowing that's the deal they're going to get, and then go to the closing and get that deal. But very few people understand that they have a federal right, a state right, that the deal that they're offered in the pre-closing documents is guaranteed to be the deal at the closing. And there's where the fraud happens. A mortgage banker who's running tight on other deals that fell through adds in a couple of points and then says, oh, I couldn't keep the interest rate without locking it in, or some kind of nonsense. Or the interest rate changes on the final deal going in because the mortgage banker makes a couple of extra dollars, meaning a couple of extra $5,000, $6,000, $7,000 by increasing the interest rate. That's a violation of federal law, and that's fraud. So here's the thing. Go to a mortgage banker, go to a bank, go to wherever you do online, you go to get your loan, get that pre-closing truth in lending disclosure and compare it against your final truth in lending disclosure. It has to be the same. It has to be the same. If it's different, you got scammed. And that's going to happen a lot. It's going to happen a lot because the number of deals is shrinking and the number of houses being sold is shrinking, and the competition amongst all of the mortgage bankers, especially amongst the ones who jumped in lately and don't know really what they're doing, is going to get fierce. And they're not going to be able to pay their bills as they expect to be able to pay their bills, make the money they were used to over the last 1.5 to 2 years. And so some of them are going to start to cheat. Guarantee you it's going to happen. It's called mortgage origination fraud. I got your back. I hate fraudulent mortgage bankers, but I like you.